Hey, welcome to my channel. My name is Curtis A. Merriweather Jr. In 2020, I was named the game changer by the White House. But today, I'm going to serve as your government contracting mentor. Now, this channel, our purpose is to help entrepreneurs overcome the business challenges associated um, associated with government contracting and all things business. The way we do this is through providing consultation, education, and training. Now, I have a great topic for you all today. We're going to talk about pricing strategy. You'd be surprised how many times I get asked, Kurt, how do I set my pricing? This is a very common question, and it's the make or break for government contracting. Our businesses rise and fall based on our ability to price contracts. So this is extremely important. And there's just not, quite frankly, just not enough content about pricing for newbies, emerging small businesses, new government contractors, or business professionals in general to understand how to really do this. So I'm going to distill some guidance and kind of how to approach this, and then tell you how to, who you should contact in order to do this more effectively. But before I do so, let's run our commercial. Entrepreneurs overcome business challenges by providing consultation, education, and training support. I know you've heard about the multi-billion-dollar government contracting industry. In this course, I will teach you how to find an abundance of contracting opportunities without writing a proposal. This is the same strategy that I've employed to win billions of dollars in contract opportunities since 2010. You'll learn a 7-step strategy that's proven and it works. I will teach you the fundamentals needed to find immediate opportunities without writing proposals. Our techniques are proven, safe, and legal. Take the first step. Join our 8-figure GovCon email list and check out our course offerings today. Register today. Your financial future may depend on it. Okay, now that we got that out of the way, so I do encourage you, before I jump into my topic, I do encourage you to go to 8-figure GovCon. That's the new course that we're launching to provide some actionable strategies based on the 7.7-step system that I use. Government contracting can get complicated, but I have distilled it down into bite-sized chunks, and I want to make sure you have what you need so that government contracting can change your life like it did mine. Now that we got that out of the way, we want to pick up where we left off. Today, we're going to talk about pricing strategy. This is probably one of the questions I get asked the most. It's at least in the top 5. So today, I want to demystify pricing for you. Okay. So let's jump into it. Let's see here. Now, let me get my screen together. Now, on the screen, you see this thing called total cost. Now, if we go back to accounting, we learned that total cost equals our fixed costs plus our variable costs. Fixed costs are costs that are static, they do not change. And variable costs, just like variabilities, talks about their ability to go up and down in value. Now, we're going to talk about these 5 pools: our direct labor, our overhead, our fringe pool, our G&A, stands for general and administrative, and in our profit pool. And the goal here is to develop what we call a wrap rate. Now, you're going to see why this is important. And this is one of those things that a lot of folks just don't touch. But this is something that I live by. And as government contractors, it is absolutely essential that we know our numbers. You have to know your numbers. So let's jump into this. All right. Now, direct labor. So what is direct labor, Kurt? Direct labor refers to the amount that you are paying your employees or temporary employees. Now, you could even throw consultants in here if you want to. However, let me say this. I need you to be very careful. As government contractors, we cannot abuse the 1099 status. If you are directing work, if you are telling people when to come, when to go, and telling them how to do their work, they are not a 1099. They are a W-2. So make sure you talk to your employment lawyer to make sure uh, you're properly categorizing W-2s from 1099. So contact your legal counsel to make sure you get guidance so you don't get caught by this. This is one of the provisions that the IRS has been really cracking down on as of late, because it's common that many companies are hiring 1099s because of the tax benefits, when in fact the folks being hired should be W-2s. But I digress. So for direct labor, this refers to the people that you are employing to provide said product and or service. Now, there's this distinction that I want to clarify. There's this whole notion of a work year versus a billable year. Now, many of us have been conditioned to think about work years because many of us at some point were probably employed by another organization. And we know that full-time employment is 2,080 hours a year. That's 40 hours a week, which is typically full-time. Anything in excess, of course, is full-time. So 40 plus hours a week, and you have 52 weeks in a year. That gives us 2080. This is when you're an employee. This does not apply when you are a contractor, when you are a business. If you have a services contract, this is what we're talking about here. Products are a little different. When you're talking about a services contract, however, the framework still applies. But we're going to really drill in on the service contracts. So when you're providing a service, line service, home health care, logistics services, this is the framework that we're using. Now, a billable year is a work year, 2080, minus all of your paid days off. Your paid days off are sick leave, maternity leave, jury duty, all the things that, federal holidays, all the things that your company pays for when you're not working. So we need to distinguish a work year from a billable year. They're not the same. The federal government, or no company for that matter, is paying you for your employee time off. You're not being compensated. This is actually time in the position, time in the job. Vacation, jury duty, paternity leave, maternity leave, all of that stuff is not included. So in direct labor, we want to be mindful of what is the billable hours. Okay. So our first pool, if we go back to the previous slide, our first pool is direct labor pool. This is talking about how much money you're paying said employee to do a job on an hourly basis. I don't want you to think about annual salary. I want you to think about billable hours. Okay. Now, next is overhead. Now, in our formula, total cost equals fixed cost plus variable cost. Overhead is most likely variable. Now, it can be fixed, it can be hybrid. But for our example here, just to keep things simple, this is a variable cost. This refers to expenses that are needed to execute or perform said contract activity, whether a product or service company. So this is your overhead. In theory, if that contract goes away, what expenses can you eliminate? So when you win a new contract, your overhead goes up because there's additional functions, additional capabilities that are needed to execute or provide services on that contract. So let me give you some examples. Maybe this is a program manager. The program manager is responsible for the cost or the budget, the schedule, and the quality, and maintaining the scope of a contract. That's their job. Cost, schedule, scope, and quality. Their job is to oversee contract operations. If the contract's large enough, maybe there's a deputy program manager. Then you got staff specific for that contract action. If you didn't have that contract, certain staff would be eliminated. And then this is talking about any type of product or materials in direct support of that particular contract and or tasking order. So our overhead is a variable cost. Our direct labor is a variable cost because typically those folks are providing said product or services. Now stay with me. So we talked about direct labor. These are the people who you've employed to do work for you to complete some action. We have our overhead. These are costs that can be eliminated if that contract goes away. We just keep it simple for there. Next pool, fringe benefits. Now, our fringe benefits refer to any kind of benefits that the company employs for the betterment of the employee base. So these are the extras. These are the things that we do to increase our retention, our recruitment, and basically maintain. We make sure we keep, happy employees. So your fringe benefits may be your 401k match. So maybe your firm or maybe the company you works for does a 401k and there's a certain amount of matching. You put your money in and the company will match you up to say 5%. That match is a fringe benefit. It comes out of this pool. Dental insurance, health insurance, jury duty, maternity leave, paternity leave. Mom and dads now can take time off in some organizations. If you got a cell phone reimbursement expense, 6 days, tuition reimbursement, and then, of course, your vacation days. You got 10 days of PTO, paid times off, your 11 federal holidays. All of that's coming out of this fringe benefit pool. So we got direct labor, we got overhead, and now we have fringe. Now, I particularly like to pull fringe out and put it in a bucket. When I say pool, I'm talking about a bucket. These are just buckets that we keep cost in. I like to put my fringe in a separate bucket because I like to be able to see what my costs are, whether it's direct labor, whether it's overhead, whether it's fringe. Some people elect to roll their fringe cost into their overhead bucket. That is personal preference. That's at the discretion of the organization. If you're the owner, it's going to be at your discretion. So work with your accounting professionals to figure this out and what works best for your organization. So direct labor was number one. Number two was our overhead. Number three is fringe. Fringe, again, can be part of your overhead bucket. Okay. I split it out, but I do want to clarify and let you know that this is a cost that we're also tracking. Okay. Now, general and administrative expenses. This refers to your back office staff. This is what is required to keep the company humming. This is your CEO, or if you're an entrepreneur, this is where your salary is housed. Your CFO, your accounting manager, controller. This is where that money is housed under G&A, general and administrative expense. Any kind of personal property or real estate is in here. These are typically your fixed costs. When contracts come and go, this cost remains. Now, there's some variability, employees can come on, but for all intents and purposes, if we keep the company static and a contract goes away, the backbone, recruiting is probably in this cost because you're going to have a recruiting function, whether you're winning contracts or not, especially if you got ongoing contracts. So your fixed expenses are typically G&A, right? So again, this is talking about your back office, CEO, CFO, CMO, HR, all those different officers and those that help business operations. Okay. These are your operations people. Okay. Let's move to the next one. Now, profit. So we had direct labor, we had overhead, we got fringe, and we cannot forget about profit. We are in the business to make money. So profit refers to that residual. After all the bills is paid, what am I making? That's the residual generated from delivering said product or said service. Now, profitability is typically highest the closer you are to the point of origin. What do I mean? If you are the OEM, the original equipment manufacturer, you're going to have more profit than, say, a value-added reseller, someone who's just, or distributor, someone who's taking said product from the OEM, from the manufacturer, and reselling it. So the closer you are to the point of origin, the more profitability you have. Now, in the product space, it is not uncommon to see 5% to 100% profit margins. And if you watch one of my previous videos, which I'll put at the end of the screen, I talked about some of the things I wish I had learned before I became a government contractor. And one of those things was the product space. The product space is highly, highly profitable, and it's very low on overhead if done rightly. The services business, on the other hand, the profitability can be much less. So profit from a services perspective, again, it's still the residual. Now, the government is okay, and this is their documentation. You'll hear them say 8 to 12%. It's a fair profit margin. So after direct labor, after overhead, after fringe, after G&A, the federal government is completely fine with you making 8 to 12% profit margin on services. Now, due to the tightness of that market, say it's highly competitive, you may see 4 to 8% profit margin, just simply because you're trying to compete. Now, that sounds like a low number, but when you're talking, millions of dollars, in some cases, hundreds of millions of dollars, it's not that bad. Okay. It's actually a great day. We make our money in government contracting through volume. And you got to be very careful how you structure that. And I can probably make a whole nother video on that. Now, if the thing that I want you to think about is we're trying to develop what we call a wrap rate. So we got a direct labor pool, our overhead pool, our fringe pool, and our G&A pool. Now, why are we calculating this? Because we want to come up with a wrap rate. The wrap rate allows one to determine our total cost quickly. So remember, our total cost is direct cost and our indirect cost. Your wrap rate is going to compensate for your direct costs and your indirect costs. It's a quick sales price calculation. It allows you to determine pretty easily your pricing competitiveness. Now, when federal governments are looking at price realism, they're backing into your wrap rate because they want to be able to compare apples to apples, and not apples to oranges. So sometimes in proposals, they'll give you a worksheet. I want you to fill it out. The only person you show your rates to, I'm talking of all of your rates, details, and how you came with your wrap rate, is the federal government. You will never share this with a prime contractor. For those who go on to do larger contracts, I'm talking about cost plus contracts, some of the complex contracts, you may be subjected to an audit. And in the audit, one of the things, not the only thing, one of the things they're going to look and see how you come up with your wrap rate and how you're segregating your costs and a whole bunch of other things. So as the contracts get higher and more complex in nature, you may be subjected to an audit called a DCAA, Defense Contract Audit Agency audit. Now that's really for DOD. And I do a lot of work in the DOD in the intelligence community space myself. Okay, so I just want to throw that out there. Sometimes this may happen. Now, typically, small business is exempt. Small business is typically exempt from what they call the cost accounting standards. But do recognize, as the contracts increase in value, you may be subjected to some rate oversight, for lack of a better term. All right, now let's go to our next slide. Now, when we calculate our wrap rate, and that's my dog if you hear him howling, the wrap rate in our fictitious example is going to be 1.5. So our billable hours are 1920. So the employees at $77.50 per hour. Okay. Now this is going to show you how we make money as government contractors. We'll have a wrap rate in this fictitious example. We'll have a wrap rate of 1.5. Now this is inclusive of profit. And remember, we're working based on billable hours, not work years. We're not doing it on 2080. So once I take my 2080 and I subtract all of my paid days off for the employee, I may see a 1920, an 1880, a 1860, depending on how you derive at that calculation. Now, in this fictitious example, we have an employee bill rate of $77.50. Now, this is a very realistic rate for a whole bunch of roles. IT, I do a lot of IT, so this might be an IT rate, but it could fit a lot of different rates. Now, the cost is going to be $77.50. Now, this is what we're paying said employee. So this is $100,000 a year plus person. But I'm just using fictitious examples so you can get your arms around this. at a wrap rate of 1.5. Our accounting professional helped us come up with our pools and come up with our wrap rate. And I do encourage you to talk to your accounting people to help you do this as well. Now, again, in our fictitious example, we're going to use 1920. When I multiply all those together, my 1750 per hour and my 1.5 wrap rate at 1,920 hours a year, this is a billable year, that employee generates $223,200 per employee. Now, of course, that's not all their money. Those different buckets that we talked about earlier is included in this cost. Now, this is the power. If I have 10 employees at $223,200 per year, I got 10 of them. This one contract in our fictitious example gives me $2,232,000 at a 10% profit margin. Now, again, these are just fictitious numbers. I just made them up, but they're very realistic of what you would see as a government contractor. So this gives me after all the bills are paid, and this number could get higher, and I won't talk about how to do that today, but this number can be higher based on how you play your Fringe pool. You set direct labor thresholds, and you can hire the employee for less. So there's ways to even squeeze this and make it more profitable. But in this fictitious example, I got $223,200 in profit. Now, if I multiply that, so for the total contract, I made just shy of $250,000 off this one contract. So when you start putting 4, 5, 6 contracts together, you can see how the numbers can really escalate. And this is the real value in government contracting. But you got to know your cost. You have to know your cost. We don't just pick numbers out the sky. We have to make sure they're grounded in something. So know your numbers. Know what your wrap rate is. And recognize your wrap rate fluctuates. And as your wrap rate fluctuates, you need to be aware of that. Now, when you go into a contract, there's some contracts that of course, we want to make money, but there may be sometimes where I want to break even. But if you don't understand your numbers, you're not going to know if you made money or if you're breaking even. That's why it's going to be great to have a great accounting system in place. It's going to help you know your numbers and see your profitability. We should be looking at our numbers at least monthly. That's worst case. You should be looking at them more than that, but at least monthly after reconciliations and after the income statements and balance sheets are generated, you should be doing some comparable analysis to see where the opportunities lie. There may be some changes you can make mid-course to make that contract more profitable or to minimize any kind of losses that you may be having. But you gotta be looking at your numbers. Now, how do we do this? So everything that you said, Kurt, I understand. I agree with it. You need to probably go watch this video again. Listen to this content over and over because some of these concepts may be new to you. I get that. I understand it. But you want to find you a good accountant, an accountant who understands government contract accounting. Now, you don't want to get someone who's just an accountant. You want someone who understands contract accounting. Specifically, these pools, when you start talking about cost pools, those terms should be familiar to them. All accountants are not created equal. So you want to find preferably a CPA, someone who has worked with government contractors before, someone who's familiar with your accounting system, or you may need to upgrade. Now you can use some of the out-of-box systems as is with some add-ons, and maybe I'll do a future video on which accounting systems are best. But you need to make sure that your accountant understands cost accounting. So government contracting accounting is a form of cost accounting with some nuance. You need to understand your allowable, unallowable costs. But that's all I'm gonna say for now. So the takeaway from this is I need you to make sure you understand the different cost pools: direct labor, overhead, fringe, G&A, profit. I'm not expecting you to do this. I'm expecting you to be able to take your information to your accountant who understands government contracting, and you guys come up with your pools. They're going to help you and come up with a wrap rate. And this is going to help you to do forecasting on the fly, because once you know your wrap rate, there you can it's just math. You can back into, okay, if you give me the maximum amount, because they may give you an independent government estimate. They may say, hey, we got to bill, the max you can bill us is X dollars an hour. And if you have the numbers, you can reverse engineer back into what's the most you can pay for direct labor. It's just math. So once you know the basics, it gets easier from there. Now, I know this was a lot, but I promise you it's doable. If you got a question, leave me a question in the comment. I hope this video was helpful for you. And definitely, if you have not already, I need you to like, share, and subscribe, because I'm going to send out more videos like this. So you're going to get information on this channel that you're probably not going to get anywhere else, just based on what I've seen in the YouTube streets. So I'm a practitioner. I live this. I teach this. And I want to level the playing field so that you can find success as well. Government contracting, as many of you know, changed my life. And I know that financial potential is there for you. And so I want to give you some tools to help you. So, of course, I encourage those who are very serious about doing government contracting to look at the course and take the course. And we're going to give you even more. But if that's not the case, just keep coming on this channel, and I'm going to be distilling a lot of information. I have a lot of content, and I was once where you are. So I want to make sure that we're providing value. And I'm going back and I'm thinking about the questions that I was asking myself when I was in your shoes more than 11 years ago, when I started my company with little to no money. And so these are the things that I think are important. And on this channel, I want to share the things that I wish I had known, or the things that work for me, so that you can find success too. The whole goal of this channel is to streamline your learning process and give you actionable stuff. We want to be your one-stop shop for everything government contracting. So if there's a question that you have, definitely leave me a note in the comment. I'll make a video, because if you have the question, someone else may have the same question. But thank you for taking time. Thank you for sharing and subscribing and liking and leaving me a comment. I look forward to seeing you in future videos. Hey, and go back and watch some of my videos. There's some videos over here that I really want to make sure that you get an opportunity to watch. Till next time.